Have you ever heard the phrase, the Wall Street casino, or have you ever wondered, hey, is investing like gambling? Well, I've got an interesting take on that today, a new spin. We're going to answer that question and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. So, saw this quote the other day, and it just got me thinking, okay? And I've heard the question, I've had lots of clients ask me over the years, hey, well, investing's like gambling, or investing feels like gambling, or you hear phrases either on the news or wherever about the Wall Street casino, and this idea of investing being synonymous with gambling, it's something that as a certified financial planner I've had to answer every time, or many times, okay? And I saw this from an individual that I follow on Twitter recently, an interesting take on that. Take a look at this. So he said, the stock market is not a casino. In a casino, the house never loses. I'm paraphrasing here. But in the stock market, the house makes sure that almost everyone's a winner. Camp out on that for just a second. When you're gambling, okay, when you gamble, the odds are set up by the house so that you eventually lose, okay? Eventually, if you stay long enough at a casino, you will eventually lose. That's sort of all the odds are sort of set up so that they tilt slightly in the house's favor. The exact opposite is true with investing. The whole system is set up to tilt or to make it so that it's in the investor's favor. The longer you stay at the casino, the more likely it is that you're going to lose money. The longer you stay an investor, the more likely it is that you're going to make money, right? Think about it this way. The house, the powers that be at a casino are structuring everything so that the house ultimately ends up winning. But in the economy, in the stock market, the powers that be, the Fed and politicians, are structuring things so that ultimately investors end up winning, or the stock market ends up winning, right? And this individual, I follow him on Twitter, and he's sort of a doom and gloom, or at least he is with the Fed and all the manipulation that's been going on. And I don't know how much of a Wise Money fan you are, but I find myself in that camp. I'm a long-term investor, and I love what investing and compound interest can do for individuals, and yet I just look at everything that's happening with the Fed and Congress these days to prop up and push the markets in certain directions, and it kind of gives me the heebie-jeebies, and that certainly happens with Sven, this individual. So he's making a point that basically you might not agree with some of the measures that Congress and the Fed are doing right now. But listen, the entire system, they're spending all sorts of time trying to make sure that the investors eventually win, that the market is okay, that everything's going to be taken care of, versus at a casino, the exact opposite happens. So let's take it a little bit deeper and ask the more tangible questions that exist around what is similar between investing and gambling, or is it similar? Is stock market investing, is it gambling? And so the first thing I'd point out is that it isn't, because gambling is typically a zero-sum game, okay? If I walk up to a slot machine and I put $1 in the slot machine, I pull the lever, I'm either gonna lose all that money, or I'm going to win something. So it's zero sum. I'm either losing or I'm winning, zero sum. Investing is not zero sum, okay? When you invest $1, let's just use that example. $1 in a slot machine, you're going to either lose or win. $1 in investing, say $1 into the S&P 500 index, you are an owner in the world's best enterprises. You own it. You're an owner. I'm not saying you own the fund. I mean, you own the fund that makes you a fractional sliver of an owner of these individual companies, right? And so, and that ownership gives you right? So it gives you ownership of those profits, and you receive those profits in a couple different ways. One, if the company pays out a dividend, takes those profits and says, all right, here's a dividend, here's here's some of the cash profits to you investors, you owners, okay? So that's one. Or two, those profits build up and they increase the value of those shares in the future by either multiples from a bigger profit margin, or as an asset, which helps make the value of the company bigger. And the other thing that I point to is, I think at the crux of the question, at the base of the question of is investing like gambling, the question, could I lose all my money? Okay, and when you're investing in an individual stock, one specific company, there's all sorts of examples where that answer is yes. You could lose all of your money when you're investing in one individual stock. I've said in videos before that I've got 3 young kids. They love Disney, and so I spent so much money on Disney when these kids were really young that I finally bought shares in it because I just needed to own the place, which is a joke, because my fractional, like a sliver of a sliver, I own a couple of shares, right? But it made me psychologically, I felt a little bit better spending how much for a stuffed animal or a shirt of Mickey on it? My goodness, I better own the place. Yes, Disney, as strong and powerful as it is, could go bankrupt. And the odds are it might someday, right? Way out in the future, who knows? It could go bankrupt. That money, those shares could be worth nothing. Now, typical investing though, if the stock market went all the way to zero, for you to be in a long-term investor and diversified mix of U.S. international stocks and bonds, the entire stock market would need to go to zero, which would, in order for that to happen, the entire commerce, business as we know it, goods and services, would need to disappear completely. And while that's possible in Armageddon type scenario, it's not probable. In fact, the probability is next to nothing. Now, the similarity that I would draw between investing and gambling is when you are investing in individual stocks, okay? So just really quick on this, if you're investing in individual stocks, that to me would be similar to gambling or being a poker player or playing blackjack. Now for me, I'm not a poker. Let's take blackjack. Let's take poker. I'm not a poker player. Okay. Have I played with friends in high school and college and occasionally now and then? Yeah, but I don't know strategy, all that sort of stuff. So for me, I haven't spent time learning strategy. I don't practice it. I don't play it a lot. And so odds are, if I walk into a casino today, put some chips down on a blackjack table, I might lose or get lucky. And if I get lucky, if I stick around, then I'll eventually lose, and I'll end up losing the money, okay? The only way I make money is if I get lucky and then cash out quickly before my luck runs out. Because ultimately, there is strategy connected to poker or blackjack, right? There is strategy that influences your odds and whether you will end up making money or losing, right? Same with investing in individual stocks. If you're someone that read an article or heard someone at the water cooler or something like that give a stock tip, hey, you should invest in GameStop, and you don't know the strategy around it, you haven't built a trading strategy or investing strategy, done the research on whether this is a strong company, what their suppliers are saying, vendors are saying, looked at their financial statements and all that sort of stuff, then that'd be akin to you not being a poker player, stepping in a casino and trying to play, right? Where, listen, it's possible you could get lucky, or there's a good chance you're going to lose. Just like in poker or blackjack, for example, you can work a strategy with individual stocks as well, and that can prove to be extremely profitable. How do I know that? Warren Buffett's and Peter Thiel and these individuals who have been able to come up with a system where they're evaluating individual stocks and they can buy and sell them using that strategy over time effectively. Same thing with Annie Duke or some of these other professional poker players, where yes, it's a game of odds. Sometimes things change those odds and change things in their in or out of their favor, but there's strategy involved with it. So for the rest of us, long-term investors, gambling is not investing, okay? It's very different. It's not a zero-sum game, and the entire premise is that the house is not setting up the casino so that the house always wins. It's essentially the opposite. That the longer you stay, all the rules, everything is being set up so that long-term investors ultimately win. Work with your certified financial planner. Make sure that you've got the right investment strategies in place, that you're working that long-term sound investment strategy. Work with your CFP on that. If you don't have a CFP, you can always contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well. Or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.